Good afternoon, everyone, and welcome to this session of the Beginning Farmer and Rancher Lunchtime Learning Series. My name is Josh Campbell. I'm our Beginning Farmer and Rancher Program Coordinator here at OSU. And as you can see there on the slide set, we want to recognize the support of this webinar series, which is supported by the USDA National Institute of Food and Agriculture through the Beginning Farmer Rancher Development Program. We really appreciate you joining us this afternoon and your continued engagement in these webinars. Today, we're going to hear from Scott Clausen. Scott is an area agricultural economist with OSU Extension, really covers the eastern half of the state in terms of helping folks with agricultural economic issues. And so we'll hear from him today on a range of financial topics. I gave him quite a bit to talk about. Each one of these individual things could probably be a multi-hour session, but he's going to try to hit us with some things that we should think about today. So with that, I'll turn it over to Scott. Thank you, Scott.
Okay, Josh, appreciate the opportunity to speak with everybody here today. It's just give me a thumbs up if our audio and screen is correct. Josh, is that good? Okay. All right. So yeah, so as Josh mentioned, my name's Scott. I'm an ag econ specialist in Eastern Oklahoma, helping folks out with kind of whatever we can. And he's right. It's kind of a big task or undertaking for just information on all of these issues. But I try to just pare it down and think about, what are the most common questions that I get, and then kind of look at it retroactively as to, what are the things that I wish people knew, before they had the question, right? And so we'll try to pare these down to be a little more maybe to the point, and let you ask questions in detail. I think it was Dr. Burr who last session mentioned our kind of disclaimer. So I'm going to talk about some tax stuff. I'm not a tax preparer or an accountant. I'm that unlucky soul that gets to go read the Farmer's Tax Guide all the time and find things for people to help them with that issue. But again, you do need to have these conversations with your attorneys, with your tax preparers, whoever is involved in that. And I think our goal from our perspective is to put you in a situation where you can have really good kind of detailed conversations with them, know what questions to ask, and how to explain your situation with those people to make sure that conversation is useful. So enough covering that. Let's jump in to some questions here, and I'll start with one. You might be already kind of questioning what my motives might be, or what kind of nefarious actor I am in this situation by putting that first question up there. But just you guys chime in the chat, make this as interactive as we can over Zoom. How many sets of records do you think you might need on a farm or a ranch operation? See if we get any respondents on that. See if anybody's awake yet. Anybody? Multiple? Yeah, you took the easy one there. 5? Lots? Man, okay. You guys might be my kind of audience with those responses. So yeah, so I was presented information this way one time, and I kind of thought, I was like, man, I don't know that I'm in the right audience if we're having this kind of discussions. But we really need to think about kind of what audience are we working towards. So I'll just put up right up front, this doesn't mean that this information is different amongst all of these different people that you interact with. But what I'm saying is that each one of them has a different role and a different purpose. So with your information, the target might be different. So for instance, if it's you personally on your operation, you might want to know, like, what can I do the best thing for my business? How can I do that thing? What should I do with these assets or my time, etc. So you might have a set of records or information that you need to make decisions off of. A bank might have a totally different set of decisions, right? What are some of the first things you get asked for when you go to a bank? You get asked for a balance sheet, usually some tax returns, typically, and a lot of times they're just trying to build a cash flow for you and your operation. And then taxes is an easy one. All we go through all that process just to determine, what is my tax liability for the year. But we can think about this a few different ways. All of these entities value assets differently as well. So for instance, if you were to go buy a tractor, okay, and use it for a year, how would you value that personally? What is that asset worth to you? To you personally, it's probably worth whatever you could get on Facebook Marketplace and sell it for, right? Whether that value's gone up or down, good deal, bad deal, that's probably how you're going to value that asset, which is great when you're making personal decisions, right? If I'm going to sell this and buy something different, etc. But how would a bank value that asset? Generally the bank is going to loan you or have a policy that's going to give you a certain portion of that value, like a trade-in value or a loan value. It's generally not going to be exactly what you could go sell that for on the marketplace. From a tax perspective, the cost of that asset is just the beginning. We could maybe take depreciation on that asset. And from a tax perspective, we've changed the value of that asset. So again, the analysis and the end goal that you have for all of these different areas is important. So while I'm not saying that they should change necessarily, but what is going to be different is what they're going to be using that information for. So we always need to be keeping that in mind if we're dealing with our taxes, if they're dealing with the bank. Asset value is one good way to look at it. Those might be different amongst all of those different sets of eyes that are a part of our system. So let's dive into taxes first, and I'll give you just kind of some quick background on me. Before working in extension, I was a banker, and so I've had the opportunity to see hundreds, if not thousands, of different sets of tax returns in my professional life. And one of the things I think that we need to keep in mind is that not everybody is an expert in every area of their field. Okay, so for instance, I'm an ag economist, but I'm not an accountant, right? So could I handle some kind of surface level stuff about taxes? Sure, I can usually handle that. But you can also get pretty quick. I can get into some waters where I'm like, hey, I don't know. We need to check with a pro on this. The same is for your tax preparer. Your tax preparer might be great in working with people that have W-2s or oil and gas income or whatever it might be. That doesn't mean that they're an expert in ag or in the specialty area of ag that you're working in. So one of the big issues that I've seen historically is that we assume that they know everything. We drop them off a kind of just a pile of receipts and we move on. And then when we go back and look at those tax returns, and we might say, well, what is this? Or how did they come to this? I mean, I don't know. Tax guy did that. Okay. We've got to make sure that we're more involved in that process. Okay. Because if anything ever does come into question, we've got to be prepared to say, okay, this is where that came from. This was how that was created. And we need that background to be able to do that. The other thing is know where your resources are. So that is the link there, publication 225 from the IRS. I use that all the time. That is the farmer's tax guide. And a lot of the stuff, if not all of the stuff we talk about from a tax perspective, is going to come directly from that we're going to see. That is a very, very useful publication. There's a lot of good tax information out there on ag. But again, that is always your go-to. That is the publication that's put out annually by the IRS to talk about preparing farm taxes each year. Now, you'll notice as we get into that third component in that the IRS gives us some outlines and some guidelines, it's really our responsibility to come up with the record keeping system or the method that works the best for us and still accomplishes those requirements that they have. And they're really pretty simple and logical just from our records perspective. I don't feel it's anything kind of over and beyond what we should be doing anyway. But it is our responsibility. So they give us some different avenues to satisfy those requirements. We've got to come up with a way that suits our business the best and suits how we manage things the best. So let's jump into this. Just a few questions about taxes. So who can take deductions? So I'll read through that real quick. If you're in the business of farming, if you cultivate, operate, or manage a farm for profit, okay, I put those kind of emphasis points on there. Those are very important. We have to separate the kind of identity of our operation, whether we're just operating for fun because we like to do it, or are we operating as a business? And I think they mentioned last week, we are talking about LLCs, et cetera, about, do you have separate accounts? Do you operate as a business? Do you operate as an LLC? The kind of the same litmus test we can apply to this. I often ask audiences when we start to have this discussion, like, and this is not tax advice, obviously, but I ask him, like, what, at what point does my bass fishing habit, okay, turn into a business and separate itself from being a hobby? How many tournaments do I have to win? How much money do I have to win before it's now a business? So think of it that way. And we've got to make sure that we are operating and trying to show that we're operating for a profit. There's a whole nother presentation we could get into about hobby losses, and where it's basically just, it is exactly what it says. We're just trying to write off losses from our hobby, and we can't do that. And there's a whole kind of litmus test we can go into to get through that process. But at the end of the day, we need to be trying to make a profit. It doesn't say that we have to make a profit, but it says we need to be managing for one in some form or fashion. So we have to keep that in mind. We get these deductions from running a business, not from just doing what we enjoy. So record systems are really variable. Let's just put it that way. So a couple of things that are important here in what the farmer's tax guide says we should have from our record keeping system. We should be able to show our income or where our money's coming in, and then be able to list all of our deductions and have the supporting documents from that. So I'm great at not practicing what I'm preaching here. If you pull up the center console in my farm truck, you will see an explosion of receipts, right? Every time I hop in it from buying feed or whatever, pop open the center console, throw in the receipt, slam it down. We're worried about it at the end of the year. Okay, that's how most of us operate. Okay, so the receipts function in that is very, very important. So how we support our actions is very, very important. For instance, receipts from sales, any bills, expenditures, invoices we get, we need to be kind of cataloging them and putting them together. I would suggest you start by year and then start by Schedule F category. That's kind of what I end up with. And I think it works fairly well. The other thing I would put into this is that while we think we're always going to remember, we generally won't. Okay, so, or maybe we won't remember exactly what year it was. I would really encourage you in your system, on the receipts, on a running log, something like that, that you would keep notes about what things are that are maybe out of the ordinary. Is this the year that you had to replace a piece of equipment? Is this the year that you had tornado damage? Is it and had to make significant purchases to repair things? whatever it might be, you're not going to remember the story and the background behind this issue 2, 3 years later. So it's really important that not only we have those receipts to verify either the income or the expense, but also that we have the story behind why. Because generally speaking, we won't remember years down the road exactly when that event or the reason why something happened. So how long should we keep them? Generally speaking, you can go through there, those invoices, etc. You can kind of skip down to the bottom. It generally means you must keep your records for at least 3 years from when your tax return was due or filed. So that's the initial, or 2 years within it was paid. I would tell you that generally I would try to keep them as long as I could. They don't take up that much space, right? I mean, find a good way to kind of get them in a banker's box or something, whatever you got. But try to get them and keep them around as long as you can. There are exceptions with this. For instance, what about assets? We'll have a lot of assets on our operation that we might have around for much longer than 3 years. Think about tractors, etc., things like that. Those things stick around for a long time. We need to keep those records for as long as that is a vital kind of a part of our operating system. So, because when that thing is bought or sold, etc., will have tax implications. So there are exceptions to that. There's some payroll issues that could come up in that as well. But generally speaking, a minimum of 3 years, and if you can find a way to do it reasonably, I would go ahead and hang on to them. This is one of the real big gray areas that I get, and what can be deducted. So assuming I'm operating for managing for a profit, it is a business venture. What can I claim as an expense? And man, this is awfully gray in my opinion. But what is ordinary and necessary to operate for a profit? Um, Man, that's awfully could be different for a lot of other enterprises, for different businesses. Um, it's awfully great. It's probably why it was written that way. But what's kind of ordinary and necessary? So what do you need and what's common? That really opens up the gamut here. Next, I'll show you kind of the Schedule F that we're going to be getting to as we input these revenues and expenses. And there's a lot of just basic categories on there. In some of the workshops I do with producers, I always find it funny. I'll pass out kind of a mocked up Schedule F and be like, okay, what do you guys see? What do you analyze from this Schedule F? And I've got kind of a big chunk of things in other expenses, and they're like, it's funny because they almost think like, that you can't have others. Like that must mean, there's something in there it's not supposed to be there, even though that's got nothing to do with the discussion that we're having. So there are things that fall outside of the norm that we can claim. However, um, we've got to do so kind of in the right location. So this is a Schedule F, and so this is what we file for our farm or ranch activities. And so the top side of it, kind of just normal stuff, sales, etc. The bottom part of it is kind of our generic cost categories. And so this is why I say these other section can get pretty extensive in terms of what we are counting in that category. Most tax returns or preparers might put a total there, and then they've got another list that itemizes out what's in the other category. But this is kind of your baseline stuff: vehicles, um, uh, seeds, fertilizers, all those types of things that you might be putting into the system. Those are the types of things that we get to deduct on our tax returns. So again, that's kind of where we're wanting to end up in that process. I put off to the side. I can't remember what the acronym there at U of A is, but it's Financial Tax Assistance Program, something like that, is what it's for. But there's a great program going at Arkansas right now that goes through a lot of the specifics on tax preparation, categories, etc. That's really good for producers, so that's definitely worth a Google when we're done. Not right now, but when we're done, to go check out to get some more information on the tax stuff there. So let's move out of the tax kind of discussion. We've spent quite a bit of time there, and move into some other those other two periods for bank and personal records. Again, that Schedule F is really good at what it's designed to do. And what it is designed to do is determine tax liability. That is not a management based piece of information. Okay. Again, we need separate records. That's goal is to determine tax issues, not to determine whether you should buy another piece of equipment, whether your business is profitable, all of those types of things. So to get to some of those other issues, we need to be looking at our other records. And I wanted to put up here some of our kind of traditional means to do that. The three kind of cornerstones of our financial documentations are our cash flow, our income statement, and our balance sheet. OSU's got great fact sheets out there about how to create those and what they are. I'm going to dive into a little more detail on your cash flow here in a second, but I wanted to put up there, there's also a lot of software options to develop these. Where we see a big lag just from a working with producers perspective is that there are very few software options that are able to integrate both production records, how much you grow, when did you sell it, etc., and the financial records. And so that gets really, really difficult. A lot of times we might have two different means, one to track production records, one to track financial records, and getting them put together can be a little bit of an issue. One thing I do need to I just jog my memory on the tax perspective. Most operators operate on a cash basis of accounting, which that means they're going to declare those income and expense items when they are transacted. Okay, we're not holding and rolling over inventory, etc., for those. So keep that in mind. The bulk of producers are using a cash basis for accounting on that front. So back to this one, the cash flow and income statement. I would urge you, if you're going to get started, maybe income statements and balance sheets might be a little big of a jump to dive right into. And quite frankly, it may not be just super important right from the start. I will, though, urge you to think about and put together a really good cash flow. And why that's important is a lot of times our businesses, our farm and ranch and businesses in general, we don't always suffer from a profitability issue. We suffer from the cash cycle, right? When does cash come in? When does cash go out? Do we have enough on hand to kind of bridge those gaps in the middle? Things like that. We have a real turnover in terms of our cash needs, and we may not always have cash available. I think a good cash flow plan, it needs to be monthly, and we need to have an actual and a projected. So what do I mean by that? I mean, we ought to be able to sit down and look at the next 6 to 7 months and map out our expected cash flows. And when I mean cash flows, we don't have to overcomplicate this. This is just cash or transactions coming in and out. There's no depreciation, there's no schedules, anything like that. It's just cash coming in and cash going out. You probably already do this on a personal level, right? You kind of know what your paycheck's going to be, maybe what your monthly expenses are. We need to just take that and expand it to the farm or the ranch. And so, there on the left, it's hard to put this all on one page because it turns into a big piece of paper. But cash inflows and sources. What are your sales expectations by month? And then go back at the end of the month and see how close we were from our projected to our actual and make adjustments. Going through this process will really allow us to highlight some of those points in the calendar where we may get really strapped for cash, or maybe we find out that we're going to have a 2 month period, 3 month period with a negative cash flow. That doesn't mean your business is bad. That just means we've got to make some arrangements so that we can get through those 2 to 3 months to maybe hit our peak sales season, where we're going to bring back in revenue. So if you were going to start with one of those three issues from a personal management perspective, a bank might go ahead and ask you for everything, or at least the balance sheet as well. But from a personal level, I would really like you to consider sitting down and working through a cash flow. And if nothing else, it's going to formalize those ideas that you have and put them into paper and let you see how close those things are to your actual goals. We aren't here to talk about production records, but I do need to tie those in here, because how do we generate a cash flow? Well, we're going to have to use our production expectations to get our revenues, right? And how much fertilizer we're going to need, et cetera. All those types of issues. So you do have to have production records. I would urge you to think about what is going to make them useful. We can take tons and tons and tons of financial and production records, but if they aren't formatted in a way that will allow us to make the decisions we need to make, we were kind of just spinning our wheels. I really want you to think about what kind of metrics would be important on your operation and track the production records that fit those, okay? And I'll talk a little bit more of that here in a few minutes, but it's important that kind of put a plug in for production records. Okay, everybody wake up. I can do a little advanced econ here. I use this example in a lot of workshops that I do. And I think it's important because hopefully it's generally a little enlightening for people. So we've got the chat going. I saw Josh posted something in there, so it's up and working. So I want you to pretend, and this is a public report, nothing to hide here, but this was from early in 14, and this company, Tyson, you might have heard from them. They put out kind of their quarterly reports, right? Like most companies do. So if let's say you're the boss and you get this report come across your desk. Ask yourself, and maybe put it in the chat if you want to. I'll give you kind of a second to look over it. Like, what's the tenor of this? Does you feel like things are going well? Are they going poorly? I joke in some of my in workshops, I'm saying, so pretend you've got a press conference with your shareholders in an hour, and this just came across your desk. What are you expecting your shareholders' mood to be? Is it going to be good or bad? Anybody take a guess in the chat? So you've got 2023's numbers on the right, 24's is on the left. Are we doing better or worse than we did last year? Ooh, Josh says worse. Anybody else? Anybody got a vote? Worse. Okay. Oh, here they come. They just needed some time to talk. Okay, great. Okay. So everybody says they're not doing as well in 2024 as they did in 2023. And I think if we look at it, I don't want to ask for all the input. We'd be here forever. But if you look at it, like operating income's down, adjusted income is down, net income per share is down, all those things are down. So let me ask you this, based on this record, okay, this financial document, why? What went wrong in this quarter of 2024 versus 2023? Do we have sufficient information to tell us that? Yeah, that's right. So we don't have adequate information, right? So think about this. Think about that Schedule F. What did that Schedule F tell you? It told you that the farm ranch as a whole, right, kind of got you to a net income or loss based on what the tax guidelines are. And that's great. But if things are going well or things are going poorly, we don't have the data organized in a way, or the records organized in a way that will let you determine what on your operation went well or went poorly. So this is the rest of that report. Okay, so let you scan through that. But if you get down, it's easier to look at the bottom half of that just to save you some time. But if we look at operating income or loss, we find that they've got their business broken out into kind of five separate businesses. And I will tell you that if you got real detailed, there's more than that. But so we've got the beef business, the pork business, chicken, prepared foods, and international and other. So if we look at that, now what do we find out? What sector of their farm or their business went poorly in 24? Yeah, we find that the beef sector is the one that's like, holy smokes, everybody else kind of did okay, but the beef sector is one we probably need to take a deeper dive in. Okay, so let me ask you this. How many different businesses are you operating on your farm or ranch? You might think of, well, it's just one. I would say it's not just one. If we take just the most generic cattle operation in Oklahoma, they've got multiple businesses. It's not just cows. They've got a land business. They've probably got a hay business. They've probably got a cow business. They've got a heifer development business. So we have all of these different businesses, quote unquote, within our farm that are using resources or sharing resources back and forth. One of the biggest issues that I find just with me working with producers is that we can't identify which one of those businesses is really doing well or really doing poorly. And so if we consider this our beginning farmer rancher groups, I would urge you to think about your operation as multiple different businesses. Okay. So I hear a lot of comments like, oh man, I really sell a lot of this item, okay, or I only sell a few of those items, and that's met as either positive on the top line and negative on the other line. From a records perspective, we don't have enough information. I can sell a bunch of one product or of one item, but if it took me tons of time and resources and expenses to get those items and I sell a bunch of them, that doesn't mean they're profitable just because I sold a bunch of them. Okay, we don't know. We need to know kind of what are our resource intensive items that we have. You might only sell a few of one item, but they might be really profitable. Okay, maybe we don't have to hardly do anything to get that item. It's really a low input item, okay, from a time and a resource perspective. I'd really like you to be thinking about how do you design your record system from a manager's perspective in a way that could uncover what those items are and where your significant advantages lie as a business. So we can have some of these big documents that look at the farmer ranch as a whole, but when it's time to make a lot of decisions, we need much more specific information to determine where we should be investing more or investing less. Maybe we need to get rid of one of the businesses altogether. So, for instance, maybe you've got sweet corn and tomatoes and something else. We might find that by going through and measuring these things, like, man, this sweet corn deal is really going well. We need to devote more resources there, or vice versa. Or maybe like we spend a lot of time dealing with these tomatoes, and yet we sell a bunch of them, but I'm not sure we're based on our records, we're not making a profit on a bunch of them. So maybe we should use that land area. Maybe we should use our labor differently in an area that is more profitable. So again, those are the types of things that kind of looking back on operations and discussions, I wish producers would have set up in advance. I know that sounds like a big ask, um, but it's really not. I mean, it is. It's kind of a pain, but it's very worthwhile. So how do we go about that? The first thing is we need to determine how many businesses you have and how do you want to break up your operation. Let's say, for instance, you've got a half acre that you grow produce on, that you grow vegetables on. I would still consider you having a land business. If you've got half of that allotted space devoted to one crop, then you have allocated a tremendous amount of your resource base to growing that one particular crop. So I don't know how you would do that necessarily, but I would identify how much land usage is there and make them kind of, in theory, pay for their space on your half acre for this example. The other next thing we would do is continue that. So you might have land, you might want to spread things out by season, by item, whatever that might be. Second part, a good asset list is pivotal for all of those records. And so when we think about where to start on a lot of these, the first thing to do is develop a good list of your assets. And I'm going to include labor on this, even though that wouldn't maybe go on a balance sheet, but it's important. That includes tractors, barns, equipment, things like that. Those things that maybe have a cost that you can directly think of, but they also have other costs associated with them: loss in values, depreciation, repairs and maintenance, all those types of things. The third thing is allocate your use of labor in those assets. So one of the things I find on working with producers on some of their records is they get really motivated to get started and they want everything to be perfect. Okay. It's not going to be perfect. Like that ship, you need to go ahead and let that ship sail. Okay. It's not going to be perfect. We can just do as good a job as we can and maintain our sanity, right? And we want to make things really complex. Okay. Um, let's just assign a percentage cost. Okay. And we can talk about those at a later date, but allocate how much time of my labor that's worth X amount of dollars. How much time is it spent dealing with my garlic or my sweet corn or whatever it is? How much of my fixed assets are going into those? How much tractor time? How much, rototiller time, whatever it might be? How much time is spent? If it's 30%, 40%, that's fine. Again, we're not going to know exactly, and that's okay. Then go in and track our direct expenses. Those are things like how much fertilizer did I put down? How much fertilizer put down? How much was my seed cost? How much was watering, etc. Those types of things. And by doing that, we're going to figure out which one of those businesses that we have is really the most lucrative, or where we have on our operation. Maybe my knowledge and my labor puts me in a situation where I do one of those things better than the others. And that is really common. Some degree of specialization can really help us out. But knowing where those things are, those items are, where we have advantages, allows us to commit resources to those primarily. And then when we want to start expanding into other things, we can do it a little on the side and kind of get our feet underneath us and explore those markets. So again, I know that this task in general is not why any of you got started in this, right? You don't get started or try to develop a farm or ranch because you love keeping records and financial documents and all of those types of things. I would just urge you to consider that by doing a decent job at it, it's going to let you keep doing what you wanted to do. Okay, you're going to be able to do more of those things, and that is how I would classify this. Don't let it be overwhelming. Start really small and easy, right? Don't get bogged down into the details. We do a lot of Quicken. We use the Quicken software in a lot of cases for some of the financial record keeping stuff. And I've worked with a few producers who it allows you to kind of set up some tabs so you can look at things separately. And there'll be 1,000 tabs open, and they can't do anything with the stuff that they've got in there because at one point they got really excited about the process and they made all these tabs and we're going to do this, this, and this. But at the end of the day, what did it come down to? I just needed to get done what I needed for taxes. And now the whole system is kind of iffy on how it functions for me. So don't let it be overwhelming. It's great to get fired up about it, but take some small steps. We definitely just want it to be done and to be beneficial and not snowball on us. Like I will just tell you, I have that issue at my house too. I'm like, ah, it's fine, it's fine, it's fine. And then I open the center console and lose 5 receipts flying down the highway coming home because I've let them pile up on me. So again, start small, make subtle changes, and just commit a little time every week, every other week to keeping that snowball from getting out of hand on you, and making tax season a real burden when it comes around. So, Josh, that was just about 45 minutes worth of taxes, record keeping, and all sorts of fun to tie to that. I'm happy to catch some questions, point people to some resources, whatever you guys need.
Yeah, thank you, Scott, for your time today. Really appreciate it. Some really great information, challenging information, I think, because it tasks us with maybe thinking a little bit critically about what we do and how we do it. So thank you for that. I would say I'm going to launch the poll, and please ask questions. Any questions, even if you feel like it's maybe not directly related to what Scott presented today, throw your questions out there. We'll do our best to answer them. I'm going to stop the recording now.